Peter Hug joins us this Tuesday. Peter, good to see you.
Yeah, nice to be here again, Daniela.
So, Peter, Greece has fulfilled its commitment paying 750 million euro to the IMF. And I know in your morning commentary you were saying that gold is acting a bit confused on the news, not reacting to this.
Well, I think, they met their commitment. They had to borrow money to meet their commitment. I still think the debt issue for Greece is still in front of us. It's possible Greece runs out of money by the end of the month. So I do think that the EU will make some concessions and give Greece some further time. There's even talk now of Greece holding a referendum. So, I think this will be delayed, but certainly not behind us. But, the fact that they made the payment, in fact, they even made the payment a day early. It was due today. They paid yesterday. Created some relief in the euro. With Greece having defaulted on the debt, I think the euro would have been hit hard. And the fact that they made the payment created some relief in the euro-dollar trade. And that's a very crowded trade. I still think there's a major short position on the euro. But this payment by Greece took some of the edge off the market, and the traders bought the euro against the dollar. The euro, ironically, went up exactly almost to the pip in percentage perspectives, the same amount that gold rallied overnight. But again, I think it's a temporary phenomenon, and with me, it's a matter of breaking through the ranges, and gold has been confined in the 1178, 1197 range for almost 2 weeks now.
And Peter, yesterday we had Frank Holmes on Gold Game Film, and my question to him was, did he think, or does he think, that gold has enough of a strong base to hit the 1200 level and stay above it? What are your thoughts?
I mean, if the question is, do I see the possibility of gold trading over 1200? Again, absolutely. It's to me a question of momentum. The macro picture still indicates to me that U.S. rates will rise sometime down the road prior to euro rates rising. I mean, Draghi is committed to keeping the bond purchases in place in the eurozone until mid-2016. So it's a matter of time before the Fed moves. I am still in the camp. They probably won't move at least until the end of the year, and I'm still thinking 2016. But any type of geopolitical events could take gold up, but on a macro picture, a stable to stronger dollar, assuming the equity markets don't get a hit and they stay stable to slightly stronger, I think the path of least resistance for the metals in the short term is still down.
We also had a question from a viewer for you this morning, Peter. In your morning commentary, you said a wedge is forming for gold. The viewer wants to know, which direction do you think the wedge is likely to drive a break?
Well, again, it's very tight, very good support at the 1178 range recently, and 1197's got an issue. 1202's a significant resistance issue. But if you look at the chart, you'll see that the wedge tightening in. I would imagine that we're going to break this trading range probably within a week. Either we're going to see the 1178 level breached, and then we'll be talking possibly the tests of the 2014 lows, or we're finally going to get up over 1222, and that's a critical level. And if we get over 1222, and I think that'll bring some momentum traders back into the market, and then we can start talking again the 1250 level. But those two levels have to be broken before this market shows any excitement.
So the wedge is data dependent, Peter.
It is, and you can see it. I mean, 1 minute, at 8:30 in the morning, some news comes out that suggests the Fed may move in June. I'm totally not in that camp. And you see, gold come down. And then, the next minute at 10 o'clock, you'll get a manufacturing report that shows the economy is a little weaker than expected. And then, the pundits push out the Fed rate increase to September or maybe December. And then you see some lift in the gold market. And when you have bad data, you see dollar weakness and gold strength. And when you have good data, you see the reverse. And unfortunately, sometimes you'll have 4 or 5 data points a day that conflict. And that's why you're seeing this choppy movement. It's just absolutely deadly out there for traders. You think you've got the right momentum trade. One bit of news comes out and everything reverses. So it's a difficult market to trade.
Thanks so much, Peter. Thanks for joining us. We'll see you next week.
Great. See you then. Bye-bye.
And thanks for watching this edition of For Pete's Sake. We'll see you tomorrow.